Let's keep it pretty relaxed here. If there's any questions, just stop me at any time. I'm gonna share my screen. I got a little presentation. Yeah, small group, so let's definitely keep it relaxed. So I'm Harison Frye. I'm a co-founder of Acquire.Fi, and here to talk about acquisitions and OTC and Web3. So what Acquire.Fi is, it's a Web3 marketplace. Yeah, we do digital asset advisory, OTC. We also do secondaries and OTC. So we handle a lot of the bigger pre-IPO equities that are out there right now, that you guys are all familiar with. Some of the bigger names, SpaceX, Kraken's been a big one. Some of those out there. So we do end-to-end positioning. We've seen over 350 deals in our pipeline. Our largest mandate right now, we also handle the buy-side mandate. Our largest buy-side mandate is up to 400 million. And we have institutional buyers, sellers, capital allocators. Basically, our day-to-day work is speaking with great sellers and great buyers, understanding both of their needs and putting them together, however we can, and also positioning those needs and incubating from there. So yeah, once again, any questions, let me know. There's a few historical deals that we've closed. So Kraken acquired Vertex Protocol last year. They're perpetuals DEX. So they acquired it for their ink chain. So everything on Vertex got converted over to ink, and was used basically to bootstrap volume and to bootstrap liquidity and everything there. The team bringing over the team was a big part of it, and also Vertex had a token. So the Vertex token was dissolved, and there was a timestamp. At day one, there was a timestamp taken of all the wallets that were held, and then ink tokens will be distributed to all those tokens, to all those token holders based on a formula on how many tokens to distribute. The same on Katana. So Katana was a perpetuals. Is a layer 2 that just got launched. I'm sure you guys have heard of it. They're incubated by GSR and also Polygon. So I'm sure you guys have seen it there. They acquired IDEX, which is a legacy perpetuals DEX. IDEX was one of the first DEXs actually over 7 years ago. So it's a 7-year-old team, really kind of proven track record. So it was an easy acquisition for someone that's in the space to look at, because it came with a really solid team with a long track record. The IDEX token was listed on Binance and a lot of other bigger exchanges. As you guys know, Binance listings are like a pot of gold. So there was a lot of kind of proven track record there. Katana actually did end up dissolving the token as well, and this was a majority a token deal. So the team came over with the token, 4 tokens, and is now being integrated into the Katana ecosystem to build out again, bootstrapping the Katana products, liquidity, trading infrastructure, et cetera, et cetera. So it's just kind of some historical deals. We've closed many more around licensing. Licensing is really important, a big topic for a lot of our buyers. Some gaming infrastructure, some launch pads. I mentioned we closed a few launch pads. So things that are hard to build and make money, and we'll go over that in a little bit here. And if there's any questions or comments, happy to hear any. So why do acquirers buy? So Web3 is a builder space. There's a lot of builders in the space. Why would someone buy a company? So typically we're seeing from our buyers, a lot of them are bigger institutions, bigger guys buying up smaller ones. We do have, of course, some of the smaller buyers, entrepreneurs, and things out there. But the more active conversations and the more active mandates are coming from the bigger institutionals. Those are, layer ones, layer twos. Sexes are a big buyer. Market makers, prime brokerages. Those conversations are happening a lot, and they're direct mandates. So we need this, and this, and then we help to fulfill those. So speed to market. Something like a perpetuals DEX or a predictions marketplace, very hot topic right now. Very, every day that if you're, a Robinhood and you don't have a predictions marketplace, which they do now, every day that you don't have one, you're losing X amount of money every single day from your users that aren't using your product. And also, your competitors are getting stronger. So the speed to market, distribution and users, same kind of thing is, if you can buy a company or a business or a company with lots and lots of users, that gives you a leg up. Regulatory licenses are a big one. Bitstamp, Robinhood bought Bitstamp, for example, last year for, I think it was around 120 million, and they had hundreds of licenses around the space to really kind of grow their regulatory arm. We actually have several sexes that we're working with directly to help their compliance profile and their buyer mandate around compliance, around their compliance. So we're actively seeking different licenses and basically regions for them to expand into. So as you can imagine, if you're a global sex, that's really important. And then talent and team. Everybody knows talent's hard to come by, especially in these days. So if you can buy a team that has built already a perpetuals DEX or built already, a predictions marketplace, that's going to be much easier than trying to find talent, hire them, et cetera, et cetera. And then strategic fit, of course. Everyone hear me and see the slides well? Okay. So what do acquirers buy? So that was why do acquirers buy? What do they buy? They buy revenue. Number one, this is like the number one thing we look at. So MRR and AR. If there's no revenue, or if revenue is not necessarily a main KPI, which does happen. I should say revenue and EBITDA. We're looking at things like users, daily active users, monthly active users, volume, assets under management, TVL, things like that. Kind of these core KPIs that everyone knows and loves in the space, loves to talk about. If you don't have a moat, then it's much harder to sell. So license stacks as well is a moat. There's certain regulatory licenses that are very hard to get and can take 12 to 24 months. So that's speed to market, plus a whole lot of legal fees and things like that. So license stack is important. Buying technology is a rarity. It does happen, and it needs to be pretty specialized in terms of what's hot and what's really being talked about in the market. So I mentioned perpetuals DEXs and prediction marketplaces. Obviously, those are very hot items. They might not be hot in a year from now or 5 years from now. Just like NFT marketplaces were hot one time in the past, right? If OpenSea was for sale, 5 years ago, I think it would have been a pretty easy to get buyers interested. But now I think would still be something to sell, but certainly less hot. So technology and kind of the overall market sentiment on what's hot and what's really being acquired is a big part there when you're looking at something technology that doesn't necessarily have some of these other KPIs like volume, users, license stack, EBITDA, revenue. So what acquirers don't buy, kind of what I just alluded to, old narratives like NFTs, and NFT projects, GameFi, ideas. No, trust me, bros. That those are for investors, and those are also, a world in its own, which is what you guys are learning. Of course, these sessions. Tech without a moat, which I just kind of covered, is what don't buy fake users. There's, it's pretty easy to jump and buy fake users. So just an example of what acquirers do not buy. Any questions here on what they buy, what they don't buy? There might be some KPIs that I missed here, but or that are more prominent maybe in your business.
When I have just a very quick one for now. We have a few more for after, but for the for the tech stack, you mentioned what they don't buy is tech with no moat. How would you, in the world of AI, where everything can be vibe coded within minutes, mostly everything, what sort of tech kind of highlights do they look for? Basically, nowadays, barely any tech has any moat, right? So, like, what would you say is tech that still has some moat to it? Sure.
I think like really complex and good tech still has some moats. But there's so many, especially in the space. There's so many ways to like fork Compound. Like if you were building Compound or Aave, I could like, and you say, oh, I have this Compound fork, or something that looks like a Compound, but there's no volume and there's no users. I can literally, in, as you just mentioned, in 10 minutes for Compound and have almost the same thing. So that's really not worth as much. I mean, you may have put hundreds of hours into it and and done this thing. It's just it's just very easy to kind of replicate these things. So anything that's not replicatable, and then anything that's really hot. So again, like I keep going back to prediction marketplaces and perp dexes. Those have been very hot in the past 6 months. Prediction markets especially. So like we have 2 different ones that we're selling right now that are just they're of high interest. The conversations with buyers happen very easily. So those kind of things, and to build, there are things that are harder to build. I'm not a CTO or from a tech background, so I think some people here actually could probably interject here and please help me out. Where does vibe coding fail, and where does forking fail, and real building come into play? Does anyone want to jump in on that?
We've had a few conversations with the projects in our one-to-one sessions about being vibe coded, but yeah, I think just to not kind of take you off the flow too much, we can continue.
Sure. Yeah. So just to hit the nail on the head one more time, if it doesn't have a moat, then probably why would someone want to buy it? So it's got to have some kind of moat. So from a taking away from this lecture standpoint, and what are some things that you guys can do and to start thinking about, because most founders come to us when it's too late. Either they're out of runway and they want to sell their tech, which is the hard conversation we have to have. And if that's not the case, and they're still doing really well and they have a really good business, often we come in and we see a lot of holes that need to be cleaned up in the business, as you can imagine. There's a lot of in Web3, there's a lot of new founders and just kind of immaturity overall with building businesses. So you should I think we could write a book on the horror stories we've seen from looking at data rooms and financials. Some of it's laughable, and don't judge. I've built companies before, and I've had terrible data rooms and financials in the past that could only make sense to me in my in my brain, and if someone else looked at it, it just looks like Chinese. So that's totally normal, especially there's more important things to do, but try to be kind of as by the book with financials and keeping accounting as you can, because at some point, but I encourage to always have an accountant, and we actually have a really great accountant that we work with that we can refer over, and they're very reasonable. This one's very reasonable on pricing, which is why we use them, and he's very professional. But so yeah, please actually come to me if you need a referral on accounting. But if you don't have the money to spend on accounting, then and you're not good at it, do what you can to really keep good records of your financials. It's basically two lines, profits and costs. Keep those as well as you can. It's worth it in the end when someone has to go in and clean it up. And so that's kind of one thing to build for, and one action item to use. And something to think about is to build for KPIs. Those KPIs that I mentioned a few slides back, those are things that people look at, right? Not just acquirers, but investors and also users of your products. If I go onto your product and you're a staking platform and you have no TVL, I'm not going to trust it, right? Even if you have audits from all these companies, why would I go there when I can go somewhere else that has more TVL? It's the herd mentality, and maybe I'm wrong. Maybe there's a lot of other great things, but I only have so much time in the day to research, your protocol versus somebody else's. So it's kind of the hard truth. So building for KPIs and having partners that help you with those KPIs. So those things are revenue, EBITDA, users, daily active users, volume, TVL, AUM, license stacks, those kind of things. So back here, keeping your cap table clean is also important. So it's really easy to have an ex-founder that, or an ex-employee that has some equity that maybe is not in the picture anymore, and that can create problems later on down the line. So it's always really good to use contracts that vest equity and that can have vesting clauses and things like that. So those are things we help with, advise on with some of our clients as well. Yeah, keeping good documents, data rooms, financials, and then always think about how to replace yourself with processes and with better people, because the dream of the founder is to hire people that are better than you, that can kind of take over. So always, it's a really hard thing to do because employees are kind of the hardest thing to hire. There's no formula, there's no science. It's more of an art. And anyone that works in HR or headhunting can attest. It's an art, necessarily not a science. But yeah, replacing yourselves with processes, and AI is so helpful to that now, and agents and things. And then I always, when we talk about tokens as well, in the two examples that I mentioned with Katana and Kraken. The reason reason we're using those as examples is both of those, the companies that they acquired had a token, and in both cases the token got dissolved. So that is a common thing to happen in the space when there's a really institutional level acquirer, but that's not always the case. If it's a lower acquirer, not institutional level, but entrepreneur level or company level acquirer, then they're going to be looking at the token with a little more scrutiny, and might not have the resources to just dissolute the token that your community is holding. So I think in this age, I'm more bearish on launching tokens than I was maybe 2-3 years ago. It's just a harder thing to do, but you guys already have your plan and your tokens there. I'm happy to expand more on that one, but and then valuation. So valuation is, there's a few ways that we think about valuation, and that a lot of our buyers think about valuation. And those revolve around those KPIs that I mentioned, those KPIs, those core KPIs. So, those are revenue multiples, EBITDA multiples, AUM or volume-based pricing, user-based pricing, license replacement cost, tech replacement cost. Those are things that, for replacement costs, license and tech, unless there's a really strong moat, usually those things are, a 1-to-1 replacement or even a discounted replacement. So, don't think because you have some license or some tech that it's, worth millions more. It's just not the reality that at least that we've seen. So these things, these are, the things that can really help boost your numbers are, quality of revenue and retention. So if there's super sticky users, really sticky revenue, long-term contracts, things like that. And the same with growth. If the growth trajectory is very high, those can help the numbers. How many buyers at the table? Those can help move and increase valuation. And then strategic urgency of the buyer. So, how hot is the industry? So again, back to perp dexes and prediction marketplaces. How hot is the industry? How hot is it? If it's a GameFi project or an NFT project, that's not hot industry. It's not going to necessarily move the project, move the numbers as much. How we see deals that are structured. So deal structures typically revolve around an asset sale or a share sale. Mostly we see in the space asset sales happening. There's just the space is too global, and compliance regulation and compliance strategy is too is very different depending on which company you're talking to. So my compliance structure is much different than your compliance structure and strategy. So everyone's kind of got their own strategy. So I'm just going to buy your assets. I'm not going to buy your company necessarily. I'm not going to buy your LLC or your limited liability corporation or anything. I'm going to just buy your assets, right, and your team. It's a much cleaner transaction. There's less involved, unless you have a license, like a very important license. So if you're a UK entity, with a UK license and like a FinCEN license, then we need to buy your entity so we can obtain that license as well. So we have several deals that have closed with those types of transactions. But again, for the most part, I just want to buy your assets. Acqui-hire is another way that we see structures happening. So typically in a deal, there's a tech portion, there's a team portion, and then there's usually some kind of bonus structure. If there is a token, then there's a token portion as well. And then payment terms, typically look at a portion of cash, a portion of seller finance, whether that's earnout or like a seller note. So there's like a debt note from the that's linked to the company, that's backed by the company. There can be stock or token consideration for the from the buyers to the sellers. So for example, a Katana or a Kraken, in those two examples, certainly stock and token considerations are attractive to a seller, right? If and that kind of due diligence, that kind of buyer due diligence, we didn't have to do any due diligence on Katana stock, when we sold Vertex. But if it was a roll up or a smaller company, then it's something we do as well. As if a buyer is coming in and offering their stock or their equity, we as advisors have to look at the value of that equity and do cross due diligence on the buyer as well. And then so in these examples, vesting and retention is usually a factor as well. The process. So companies come to us and they ask us for some advice and advisory on acquisition. Normally, we go on an initial call, understand their needs and their desires, where they're at in the company structure, and kind of and suggest to them, is it better for you to be a full advisory client, or is it better for you to go on the marketplace and get lots of eyeballs in that direction? Do you need positioning? Do you need valuation, buyer targeting, outreach, etc.? What is kind of the best game plan? So we have that initial talk, and we see what's the best game plan moving forward, and then we do do that kind of do that work. So we help position, value, and then create buyer profiles that are potential buyers that we target. So from there, then we typically have most of the buyers in our network, and we're talking to them already. That's, again, a big part of what we do every day, is talk to all these institutions and buyers out there and understand their mandates. So we have obviously a big CRM where we have all those all those conversations held and all those mandates held, where then we directly outreach and say, hey, we think that this is a good fit for you, and here's why. We give acquisition theses for these buyers, so the buyers don't just get a website or a list of KPIs and here's what to buy. There's typically a full acquisition thesis that we create that gives them based on your numbers as a buyer. So if you're a Katana and we're selling Vertex to you, this is why we think that that Vertex is a good acquisition for you, and then that helps them internally in their processes. And then then kind of the next step in the process is they show interest. We go through NDAs, intros, data room, buyer due diligence, seller due diligence. Both sides are important. Negotiations, close, transition as well. Transition is an important part that often gets missed. And then kind of like follow on support and talking to our sellers as well is important. Is an important part as well. After the transition. And that's this next slide. So there's a lot of things, because you sell your business, and then the next day you've got a bunch of money in your bank account or your wallet, and potentially a new job. So there's a lot to consider there, and a lot of kind of support that happens, and really kind of life goes on. You have some liquidity, but there's still the next project, or the next task to be completed by your acquirer or whatever else. So this is the end of the presentation, and we are always open. I'm always open, to have conversations, and I hope that these kind of can go back to this this slide. I think if there's anything to take away, probably this slide here. Readiness and build for acquisition. So maybe take a screenshot of this slide and just keep it in the back of your head. I'm happy always to have a conversation about and expand on any of these points. But these are things that you never know what's going to happen in the next year, 2 years, 3 years. So having things that are ready, for acquisitions is always important. And we like to have these conversations early with our founders. And always available on Telegram, Twitter, LinkedIn, all that good stuff.
Maybe we can do some Q&A now if you have some more time, Harrison.
Yeah, get some time.
I guess as usual, we'll jump in with the questions, and I'm sure the cohort will have some. I have quite a lot of questions, to be honest, but I'll only ask 2 to begin with and let the cohort jump in. My first question is, how do you safeguard your business you're selling when, in theory, you could be a feature that can be replicated by the company you want to sell to? And let's say I'll use an example from the cohort, and apologies for this in advance. I'm not trying to say your business is indefensible, but let's say like you build out a, let's look at prediction markets, and let's say you build out a extension that allows you to trade whilst you're surfing the news. So for example, you're looking at a news article on oil, instantly everything that's all the prediction markets that are based on oil pop up on your screen, and you can instantly make that prediction. Let's say you're now trying to sell to Polymarket or Kalshi. In theory, they could replicate it, they have the resources to, but you already have the users. Is there anything you can do to legally defend yourself? Would you say it's worth being careful, or do you not really see that happening when someone's trying to be acquired? Do businesses try to just replicate the feature instead of looking at the acquisition?
Well, that's your moat, right? I mean, your moat is what you built, is your technology, and also the users that you just mentioned. So typically, in that example, if you're a Kalshi, unless you already have that product and you already have that internally going, then they wouldn't be interested in buying you, or maybe they would be. Maybe they're doing it a different way that's not as effective, or they don't have the team. But in that example, a Kalshi, that's exactly what they would want is the team that's already built it, the users that are using it, and the tech that's there.
Okay.
But if it's something that you would be very, very worried about, what we do is we have kind of a blacklist that we don't reach out to. So those are typically if we were selling a company, those are typically early investors or conversations that are already happening. Those are what's on the blacklist. We are careful when we're talking to competitors. We've often found in Web3 in the industry that competitors aren't the ones buying necessarily. So if we're selling a launchpad, we're not necessarily trying to pitch this to other launchpads.
Okay.
If they were going to spend $1 million or $10 million on purchasing you, they could put that into their own branding and their own marketing, typically, unless it was more of a strategic play where there was a user, price per user kind of a strategic contract happening.
Okay. And then another question, and you did kind of touch on this, but I think it'll be good for me to at least understand, and hopefully for the cohort. In terms of when you're fundraising, there's this advice that you should never stop fundraising. You should always be building out your network of VCs. You should always be looking at potential investors. And fundraising scouts aren't necessarily the most appreciated, or aren't necessarily the best for your reputation always. Would you say, for example, when you're looking to get acquired, you can go to someone like Acquire.Fi, and I think in the acquisition space, the reputation of these sort of brokers is a lot higher. It's not detrimental. But would you say it's also valuable to founders to try and start building a network of potential people that can acquire them so they're aware of you? Or is it okay to actually approach these for acquirers from a cold position via a brokerage like you guys, or an advisory firm like you guys?
No, to be honest, the best acquirers are, either clients or partners, or, those that are close because they know the business just as well. The same with, investors. The best investors are ones that are close to you, that already like you and that already, intimately know the business. So yeah, I think in the same token, definitely start building that network, and it can be a similar network, right? But yeah, we've found there's been multiple times that the clients are the ones buying the actual product, right? Clients and partners are the ones actually buying the sellers.
No, I think that makes a lot of sense. Yeah, I guess opening up to the cohort. Does anyone else have any questions that they want to ask? Just feel free to put your hand up or on mute. If not,
I have one quick one. So are token warrants a drawback if it's a token that you might have in the future for a legitimate reason, but you're not really doing one right now? Is it better to raise with equity and then introduce a token in the future and then give people, an airdrop or whatever, your existing investors as per the equity? Or does it not really matter if you say, hey, we're raising equity now, there will be a token warrant, we might have a token in the future? Like, is that uncertainty a drawback, or does it not really matter?
I mean, I think it's a selling point. Ultimately, when you're fundraising and you're selling equity and tokens, it's about what you can. It's the same thing like selling a car, right? Like there's a car with these features. It's it's blue. It's got a cool exhaust, whatever. So it's features that you can sell. So you can't lie, right? You can't pretend there's an exhaust when there isn't one or something. But it's a part of the sales process, and that's when you're fundraising and when you're selling your company. It's you're a salesman.
Yeah.
And again, it's companies, so there's a lot of due diligence being involved. The same like when you're buying a car, you're going to take it to a mechanic and have him check it out. So warrants are just another feature to sell, and I already mentioned my stance. I'm particularly bearish on tokens just to have a token. If there's an actual utility that is defensible and like really actually for your product, then that's something. But we've all seen so many tokens that are just to have a token in a fundraise. They're easier to fundraise with. So I'm always pro utility and real utility.
Okay, no, perfect. Thank you.
I guess whilst we're sort of waiting for the others, if anyone else has any questions, on my side as well, do you guys actually help with the tax implications of acquisitions? And as with anything tax related, there's always typically a clever way to do something to sort of be as tax efficient as possible. I think the reason I ask is because I've seen that a lot of founders actually don't understand the tax implications of acquisitions.
Yeah, there's that varies by country and by jurisdiction. Certainly, we are not obviously tax advisors, but we definitely help with that. There's been a few different cases where we either referred over a tax advisor or shared just our personal stories, and you can use that information how you want. But end of the day, most of these transactions are in crypto, and you do whatever you want there from a tax standpoint. And I've heard stories of and there's actually several cases of founders leaving country, like switching countries just to save on taxes because they know that they're going to sell in the next year or two. I think each country has you have to live out of the country for certain years, so kind of do your own research on that. But yeah, every tax structure is different, and every country is different, and so
okay.
that's
that makes sense. Yeah. And then I'll ask my final question, just from my side. When it comes down to looking at sort of acqui-hires versus full acquisitions versus asset sales, is that typically something that like the buyer determines? Is there flexibility? For example, if someone's looking to acqui-hire you, but you aren't necessarily interested in the role, has that been a major blocker in the past? Is there like a profile of company that suits sort of each approach?
So ask again. So if the company doesn't, if the founder.
So let's say, let's say like, well, I guess there's sort of two questions in one. how do you like? Is there a particular profile of company which is more suitable for acqui-hires versus full acquisitions versus asset sales? And I think you kind of already touched on that. And then let's say someone approaches you to acqui-hire you, but you're not necessarily interested in the role. Has that been a major blocker before? Is there flexibility typically on that front?
Yeah, I mean, normally there's, at minimum, there's like a 6-month advisory contract, with any acquisition, because there's always a handover period. It could be like a 3 to 6 month. That's kind of the minimum, but yeah, acqui-hires are pretty common in the space. Like usually you want the team, where this is a tech space and there's so many, there's so much tech out there. It's, everything's based on code and so to answer your other part is the most important team members to hire are typically the tech team and the builders, versus like the salesmen or the marketers. Those typically don't get acquired in there. Or they can be, but depending on the size of the company. But typically it's the technical team.
Okay, no, thank you for that. Yeah, I guess
Cool.
Are there any other questions from the cohort? Guys, feel free to jump in. No questions too out there. I know a lot of people here are looking to be acquired.
I had a couple more, but you already asked them, so that's all good.
Yeah.
But I think, if there's no more questions, obviously there's a couple projects that could make, unfortunately, due to clashes, but will be on YouTube. So, Harrison, I think for a few of the projects here, based on kind of the lecture, it may be worth already kind of starting those loose initial conversations. A few of them are quite early, but yeah, when it comes to acquisition, Acquire.Fi is just the top company for this sort of stuff. So for a lot of these guys, we'll definitely funnel them your way. But yeah, I guess if there's no other questions or anything else, thank you very much for doing the. Yep. Anchor, please.
No, I just wanted to ask Harrison. Hi. If you have any betting companies similar with Damex or I guess BCX Pro that they're looking to sell.
Educate me a little more on Damex.
Effectively, they're OTC betting companies where they kind of help settling OTC payments in the iGaming sector.
Right. Oh, I see.
And they're looking to be acquired.
Jurisdiction, does it matter? I mean, is that mostly Malta?
Yeah, exactly. Malta. Correct.
Yeah. We can do a search there for Malta, like Malta companies with payment rails.
Yeah, that'll be great. That's something that I'm looking into right now.
Sure. Yeah, you can text me.
All right.
Thank you for G20, right?
Yeah.
Okay. I haven't talked to you in a while. All right. Cool.
Nice.
She's not in the accelerator, just to let you know.
Yeah, I was like,
one of the lectures.
Okay, they're a little bit far ahead for that, but yeah, perfect.
All right, we got a lead.
Yeah, nice. I'm gonna ping the notes in the chat. Obviously, Anchor, Harrison, you're both in the chat, so Anchor, you can probably just find this out. I mean, if you've spoken before, it's fine. And we'll upload the YouTube videos over the next coming days, and I'll send you just a link, Harrison, if you want to have a look. And then if you're fine with it, we're going to publish it fully onto YouTube, like live public after the accelerator ends. Or if you want, we can keep it private. It's up to you.
Yeah. Let me look at it first, and then I think it's okay.
Yeah, but yeah, sounds good. Yeah, I'll send it to you. I'll mark it as keep it private for now. Then if you tell me otherwise, then we'll make it public.
I think it's okay.
But yeah, perfect. So once again, thank you very much for your time. Very, very valuable insights, especially for for half the companies, even for us, to be honest, because this is something that we want to look into for Simplicity as well. And thank you very much for everyone for joining. And if you have any other questions, Harrison is in the chat, so feel free to ping him or ping us, and we'll make any groups if you want direct conversations. But yeah, thank you very much once again, and have a great rest of your day.
Cheers. Thank you.
Bye-bye.